How much house can you afford? Well, we're gonna get into it. Affordability isn't just what you get approved for by the lender. That's not affordability. Affordability is being able to purchase a house and not deter from achieving any short-term or long-term goals. I'm not trying to get you house rich and cash poor, or even worse, retirement poor. So let's find that number. Welcome back to your classroom. I'm Thatcher Taylor, a certified financial planner and owner of ProPath Financial, and I talk to a lot of my clients, whether they're buying their first home or they're buying their second or third home, on how affordable is this purchase. Make sure to stay till the end where I show you the full monthly cash flow breakdown, including taxes, to see what's really affordable and realistic on this journey. All right, calculation number one. This is going to be shown here on the screen. We got to find out how much a lender would approve you for first to create our baseline. It's going to go something like this. This is the exact calculation that a lender started with me when I started the process of buying a house, which we're in right now. And do know, subscribe, because the next video that I'm coming out with is going to be the exact breakdown, the exact numbers, the full disclosure, the complete opening of how much it's going to cost my family and I to buy a house right now. So make sure to like and subscribe so you can get that next video. Your gross income for the entire household, you're going to divide that number by 12, and then you're going to divide that number by 2. And in this example, I'm just going to assume W-2 income. Business income is extremely complex. Trust me, I know, I run my own business. It was complex. You're going to take that number and you're going to subtract all debts, car payments, personal loans, student loans, credit cards, any type of debt is going to come out of the gross divided by 12 divided by 2. That's the initial number, the starting point that you're going to potentially get approved for as a monthly payment for your mortgage. So mathematically, let's say you have $120,000 divided by 12 divided by 2. That equals $10,000 divided by 2 is $5,000 a month. Let's say you have $1,000 of extra debts for whatever, cars, credit cards, personal loans, student loans. That means your number is $4,000, and that's the all-in number. That's principal, interest, taxes, insurance, or your PITI payment, and that includes any mortgage insurance that you got to pay monthly or HOA dues. That's your full housing expense. This is an important number because too often people get buried by their monthly payment, and it eliminates their ability to, one, take care of the house because you don't have any extra expenses, and two, potentially lose the house because you can't afford the payment long term. Because remember, most of these mortgages are for 30 years. So good, again, make sure to hit that subscribe button. I want you to see the next video that's going to go over all the numbers. I'm literally going to show you the documents that I had to sign on. It should be 2 really big pages that I had to sign on the dotted line about how much my mortgage is going to cost. It's going to be really cool. Okay, so the next thing is PITI. P-I-T-I. PITI means principal, interest, taxes, and insurance. I spoke about this in the first calculation, but your full PITI payment is what you really need to think about being able to pay. Principal, interest, taxes, and insurance for the life of your mortgage. But that's not all. When they're calculating how much you can afford, they're going to add on the HOA and any mortgage insurance that comes in to that full payment, because that's the full affordability. You got to pay those to make sure you can keep your house. But where it gets interesting is that doesn't include any maintenance. It doesn't include utilities, any upkeep, any renovations, or any other expenses that come into play. Okay, so part 3 is how does this affect the budget? First, start with taxes. So I ran an illustration here. Here's an image of the taxation of a person making $120,000 that's married, filing jointly, and contributes to a 401k. Let's just assume you and your spouse max out to a total of $22,500 in a year. Let's say after the 401k contribution, the tax payment, the federal, the state, the FICA taxes, you're left with $6,144 per month. So $6,144 minus the $4,000 that we potentially calculated before leaves you with $2,144 per month. Now this $2,144 doesn't include any other deductions that maybe came out of your paycheck for health insurance or benefits, and it definitely doesn't include any other random costs and expenses. The $2,144 has to cover everything outside of that mortgage payment that we discussed earlier. So do you really think If you're making that much money, $120,000 a year, and your payment is $4,000 based on that lender's calculation, that you're really gonna be able to afford $2,100 a month extra? Let's extrapolate this really quickly. What if this was your second home? You already had one principal, interest, taxes, and insurance payment, and you needed a second home? They're gonna do a similar calculation to make sure you can afford the next home. You need to make sure that this fits into your retirement plan. And if you need help with your retirement plan, I am accepting new clients. So if you're in the 50 plus range, you're trying to figure out how this whole retirement thing's gonna work and how you wanna work through some of these big decisions, make sure to go down below. There's a get started button so you can set a quick, worry-free meeting with me to find out how I can help. So the last part of this is figuring out what could actually make sense. Going back to our example, $120,000 of income, a $22,500 401k contribution. After all the taxes, you're left with $6,144 per month. Now, the rule of thumb is no more than 28% of your gross income should be used on your housing expenses, your total housing expense. They have a specific name for this. This is called the housing expense ratio or the front end ratio. So if your gross is 10K, do not want to spend more than $2,800 per month on your mortgage. Then your $6,144 monthly take home, it would be going to your mortgage, you'd be left with $3,344 per month. That's a substantial boost in spending on a monthly basis that could go to vacations, fun, eating out, groceries, toys, and most importantly, additional savings for retirement. So then the question you've been waiting is, I think you're looking at it the wrong way. What most people do is they think, I want a $500,000 or $600,000 house. How do I make that work? So they'll push their budget way too far, which sets them up for failure later. A person should look at what can I afford, maybe starting with the 28% rule. What can I afford based off my budget? And then that's the house I should get. So here's some examples of salary needed to afford certain home payments in the 15 largest cities. Where you live has different affordability. For example, San Francisco we know is routinely more expensive. The median home value is $800,000. The recommended minimum annual income is $128,000. That's with a 20% down payment. The total monthly home payment at $3,858. If you go to Indianapolis, Indiana, where the median home value is $118,000, say you put 20% down, your total monthly payment is $600, and you only need about $20,000 of income, which I think that might be a little unrealistic. It just gives you an understanding of how much gross income your household is making and how much house you may be able to purchase. This decision is very difficult, and I know people get caught up because you go on the house search, the house you find may not have what you want, so you start leveling up a little bit here and there. But remember, a house is a long-term purchase. You want to make sure that what you get in now is just something that you can live in and you can update it as you go to make it your own. If you need help with things like this is just one element. I don't charge people for just an element like this. This is just part of the full comprehensive service that I provide for all of my clients. Stay tuned for the next video where I show you my actual personal situation that I'm going through with buying a house. Thanks for watching.